Welcome to this lesson on understanding debt instruments in India. In this video, we'll explore the world of debt instruments, including bonds, debentures, and government securities, and understand their significance in the Indian context. We'll also dive into some real-life case studies to see how these instruments are utilized by different entities in India's dynamic debt market. Let's begin with a case study on corporate bonds. Meet Apex Industries, a leading manufacturing company in India. Apex Industries has ambitious expansion plans and needs to raise funds to finance their new production facility. To achieve this, they decide to issue corporate bonds. Apex Industries appoints an investment bank to assist in the bond issuance process. They carefully structure the bond offering, determining the tenure, interest rate, and other terms. After receiving the necessary approvals from regulatory bodies like SEBI, Apex Industries launches the bond issue. Investors, including institutional players and retail investors, show interest in Apex Industries bonds. They are attracted to the company's strong financial position and growth potential. Investors analyze the credit rating assigned to the bonds and evaluate the associated risks and returns. The bonds receive a favorable response, and Apex Industries successfully raises the required capital. They use the funds to build the new production facility, expand their operations, and enhance their market share. Investors, on the other hand, earn regular interest payments throughout the tenure of the bonds. Now, let's turn our attention to government securities, commonly known as G-Secs. The Government of India issues these debt instruments to finance its fiscal deficit and other financial obligations. As an example, let's consider the case of the Indian government issuing treasury bills. Treasury bills, or T-bills, are short-term government securities with maturities of up to 1 year. The government uses T-bills to manage its short-term borrowing needs. These instruments are highly liquid and provide a safe investment option for individuals, financial institutions, and corporations. Investors purchase T-bills at a discount to their face value and earn the difference as interest when the bills mature. T-bills are considered risk-free, as they are backed by the government's ability to tax and print money. Moving on to another case study, let's explore debentures in the Indian context. XYZ Corporation, a well-established infrastructure company, plans to raise capital for a large-scale project. To achieve this, they decide to issue non-convertible debentures, or NCDs. XYZ Corporation's NCDs are structured with a fixed interest rate and a specified tenure. The company leverages their strong creditworthiness and reputation to attract investors. Institutional investors, mutual funds, and retail investors express interest in XYZ Corporation's NCDs, considering them as a reliable investment option with steady returns. With the funds raised through NCDs, XYZ Corporation successfully completes its infrastructure project, contributing to the country's development while providing investors with consistent interest payments throughout the tenure. These case studies highlight how debt instruments like bonds, government securities, and debentures play a vital role in India's financial landscape. They provide avenues for capital raising, investment opportunities, risk management, and contribute to the overall economic growth of the country. Debt instruments are essential tools for both issuers and investors, offering stability, income, and growth potential. Whether it's companies financing their expansion plans or the government managing its fiscal requirements, debt instruments are at the core of India's debt market. Thank you for joining us in this exploration of debt instruments in India. We hope you now have a better understanding of how bonds, debentures, and government securities function in the Indian context. For more information and updates on India's debt market, stay tuned to our channel.